With presence in 29 African countries, 75 innovative risk solutions, over 100 years of experience, it all adds up to being the leading specialist insurer in Africa.
Hello and welcome. You are watching The Role of Insurance in the Economy. I am Fifi Peters. Today we are zeroing in on the construction and engineering insurance industry. We know infrastructure development is a key facilitator of economic growth. However, according to official statistics, South Africa's construction industry is in a recession and is certainly struggling to turn the corner. Joining me to expand on some of the risks impacting the sector right now is the Chief Executive Officer of Mirabilis Engineering Underwriting Managers, Kurt Meyer. Kurt, thanks so much for your time. I suppose let's start off with South Africa, one of the most industrialized economy on the continent that is not doing a whole lot of industrialization as it does pertain to what we have seen in our recent past. The construction sector has been in a tough spot for quite some time. Just your state of things and how you reckon the industry is.
Yeah, thank you, Fifi. It has been tough. We generalize and we only insure engineering insurance projects in South Africa and rest of Africa and the international markets. In South Africa, it's been extremely tough. We've seen, especially after COVID, we've seen a couple of well-known contracting companies closing their doors, and we've also seen, I think, the impact of load shedding. If you take that into the economy, the global economy has had a huge impact on South Africa.
Sure.
And that obviously a concern for us. Our business is predominantly in South Africa, and then we work through, as I said, rest of Africa and the international markets. There has been pockets of excellence, we call them, in different countries, and that's been keeping the industry going quite well. But South Africa as a whole, there is a struggle. Government has I think in the last budget in 2020, the last one, 2023, 2024, put aside a substantial amount of about 159 billion. But we haven't seen that come through. We've seen it in small stages. So it's quite difficult at the moment. And we cross fingers and hope that it will change. Yeah.
Yeah, and that the sector will eventually turn. I mean, a lot of people who have been watching the construction sector have been hoping for the same thing for the better part of the decade. I mean, after the activity that we saw in the lead up to the 2010 World Cup, the sector many saw going just one way, and that was south. So I just want to talk about then the appetite for insurance in this industry that has been contracting and that has been under a bit of pressure. What are things looking like there?
So we are fortunate on the bigger projects. There are always lenders and financiers, and part of their requirement is that you require engineering insurance. So we've seen that as an uptake. We've seen that the private sector has done extremely well, bolstering infrastructure sometimes, and also doing manufacturing plants and making sure that the economy is turning. And there's been a slight increase. We've seen it in our space. Sometimes when you read in the newspaper, you don't see the activity going on behind the scenes. We've had inquiries from across the world with regard to renewable energy projects taking place in South Africa, or going to take place in South Africa, where government is putting out not just tenders but feelers to see what is the quickest manner in which they can actually relieve us from load shedding. And so there are glimmers of hope. And we continue pushing that, and as a business, we have to be optimistic, and the staff in the business, obviously, we're growing, and people ask us, how are you growing? It's difficult
in an industry that's not.
Yeah, it's very difficult to answer. But what we see is, for example, after COVID, a lot of, I would say, property developers took on office blocks and converted them into offices. And that started turning the economy a bit for us.
Sure.
And we've seen smaller contractors actually doing things at smaller manufacturing plants, solar coming in at your home. We see that happening. We see it then going from your house. We see the development going into shopping centres, and then we see it going into office parks. So that's been helping, and yeah, we appreciate all the support we get to grow this business.
Sure. Could maybe just expand a little bit more on your product offering in the industry, and just perhaps the kind of products that you are seeing the biggest uptake in?
Sure. So the two product lines that we see moving and increasing over time, specifically the contractors all risk policy, and I'll explain that and what it entails. And then we call it in South Africa we call it the PAR, plant all risk policy, and overseas it's called the CPM, contractors, plant and machinery. So those are the two lines that are really predominantly growing. So the CAR, so if you or building something at your house, we'll take it from there. If you're doing construction, alterations, additions at your home, what we do is we offer you that product, so that if you're building a new garage, we protect you in case there's a storm, there's a fire, there's an accident on site for material damage, and we then take that into account. And when there's a claim, we try and assist and bring you up to speed so that you can go on with the project quite quickly. That's the one. But that project or product you can take right through, and you can start from a little house right through to a stadium, a hydro dam, an airport, and it's similar policies but wider cover. And as you go, we build and build a bespoke wording for you. It has exclusions, obviously, like every contract has. But if it's done right from the beginning, and the insured and the insurance broker shares the right information, then we do it right. We build this product that protects you in the event of a loss, which is the right thing, and that partnership is critical, especially in South Africa, where our insurance brokers they're really key to our business.
Sure.
So that's the main relationship we have, and then we take it from the insurance broker through to the insured itself, making sure that we get all the information at the right time to produce a product that protects them when in the event of a loss.
Just in terms of outlook then, and where the industry is going and the opportunities for growth. I mean, you spoke about the fact that what has been helpful in the short term is the repurposing of certain building blocks that have provided revenue for companies such as your own. You did mention some of the current challenges, particularly as it does pertain to South Africa, where government has committed to spend XYZ on infrastructure development, and perhaps that money is not coming into the economy as quickly as most people would like. But I'd also like to talk to you about some of the other risks then to the picture, risks related to climate. You mentioned the KZN floods, risks related to theft. I mean, you mentioned cable theft, but I'd add to that something like the construction mafia as well, being a hindrance maybe for the industry and its ability to grow. And even those risks that you highlighted around load shedding and the power cuts. So how material is that for the outlook of your sector and ultimately the sustainability of the business right now?
Correct. It's difficult. All those things that you mentioned, it has a huge impact on the sustainability of insurance. Climate change is real. We've experienced it in the KZN floods. We've just recently had the Cape floods going on, and we've also seen in KZN there was no damage, not as much damage as before, but there was also a storm that took place there. So where South Africa in the past, reinsurers, so we buy our insurance from reinsurance via treaty reinsurance. And they've always looked at South Africa as quite a good investment with regard to no nat cat exposure, natural catastrophe exposure. And that's increased. And what that meant was, or for currently for the insureds, is that pricing is definitely going up. Limitations are being put in place. And even recently in Johannesburg, there were earthquakes. I don't know if you've seen that. You felt a bit of shiver, probably in this in the studio. I'm not sure, but but
well, it's still standing. The building is still standing,
well
so that's
done,
a good thing.
Well done. But it's difficult, and as that progresses and changes, the costing does increase, and cover is taken away. In some countries at the moment, there's talk about. For example, in Australia, reinsurers were talking at one stage that there shouldn't be cover for flooding anymore because it's happening so much. But they pulled back, and I see that there's still cover. But you don't want to be in that situation. But you can't control it, right? We can't control the weather. I mean, from our perspective as business and leaders, but we can limit the exposure of our business to that. And we need the insured to come on board with that, with us, and walk with us through that journey, which is difficult, we understand, but
You're obviously not the only player in town, and I'd just like to understand in this environment whereby you have got fewer projects, you've got a whole lot of headwinds there, you've got pressures on pricing. What is competition looking like, and are there incidences of opportunistic pricing just to ensure that you get some business in?
Correct. That's a very good question. So competition will always be there, as you know. We are the biggest and the largest, and we say that humbly because it took a long process to get to where we are. We started in 2006 and built the business very gradually and very professionally. To answer your question a bit, is that from our staff complement, we really try and push our training and our skills through to all our underwriters and pass on our knowledge. Believe it or not, I've been in the industry for quite a while. But
what's a while?
No, I don't. Let's not talk about that now. But and I've worked with great underwriters and learned from everyone, and we passing that knowledge on. So we look at the competitors; they are there, but we have to always make sure that we in the words of Santam, offer insurance good and proper, and that's what we do. We look at ourselves inwardly, and we produce a product that the clients need and want, and when they need it, we come to the party. But the problem is with new entrants coming into the market, into a market that is relatively, as you know, as you started the conversation, it's difficult to be in this industry, and their only competitive advantage is price, and it does hurt the market. But luckily, as a market leader, we can afford not to follow those pricing models, and put our own pricing models in, and sometimes walk away from risk. We might not have a crystal ball to say what the future looks like, but from an underwriting perspective, you know what the right thing is and the wrong thing is. Okay. So we always try and do the right thing as a team. Yeah.
Kurt, we'll leave it there. Thanks so much for joining us in studio, just providing those insights for us as it does pertain to insurance right now and what it is looking like in the engineering and the construction sector. And that is how we wrap up the end of this episode. Thank you to Kurt Meyer. He is the CEO at Mirabilis Engineering Underwriting Managers. And from myself, Fifi Peters, it's goodbye for now.